You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tusaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music means we are back. It is time once again for the Thursday edition of the Option Block. My name, of course, Mark Longo, coming at you from the Options Insider Radio Network, your home for all of your favorite options podcasts. Over a dozen coming at you now. Make sure you're subscribed to the full network. Otherwise, you are missing out. And speaking of missing out, if you're not hanging out in the pro, you're missing out on the upcoming Vol Deathmatch 2.0 featuring someone on this show, hint, hint, as well as, of course, the awesome 100th anniversary of Stack panel I did about the history of the options market last week with all sorts of special guests, as well as options oddities, and you got early access to other fun things like Brian put up a fun actionable trade in UNH this week. Our pro folks got all that first. TheOptionsInsider.com/pro is the place to go to learn all about that as we learn who's joining us on this fun Thursday. First, we go out to the hinterlands of Chicago, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike Tusaw from St. Charles Wealth Management. Uncle Mike, welcome back to the Thursday show, sir.
Always a pleasure to be here.
And then also joining us, I think he is, I see half of his head, so I think he's halfway there. None other than the Flow Master himself, Mr. Henry Schwartz. He survived his sojourn to the frozen wastes of Siberia in the middle of January, which was always a fun time to do it. And I'm pleased to see he is none the worse for wear. Mr. Flowmaster, welcome back to the Option Block. Glad to see you made it back to New York in one piece, sir.
I did, and I am happy to be here. I left the frozen wasteland of Chicago where it was going down to, I believe, 4 degrees or something, and got to New York where it was like 11 degrees. So we're really not much better off this year. In fact, out my window, so the SIBO offices are way downtown in Manhattan, and we have a view of the Statue of Liberty. It's amazing. And we also have a view of little icebergs flowing through down the Hudson and out to sea. And it's been like that for the whole week, and it's going to be really cold this weekend again. So it's pretty interesting. You see the Staten Island Ferry basically go plowing through these ice fields to take people to Staten Island. But I am happy to be here. The market is active today. It's pretty exciting. So lots to talk about. I'm excited to get
So I
into.
guess I'll cancel that ferry ride to the Statue of Liberty for later today and instead just focus on the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. And today we got a whole mess of red on the screen. So if you were enjoying all this green, if you were enjoying that brief flirtation with 7,000 in the S&P, wherever he was that day, Uncle Mike, I could hear him yelling from the hinterlands, never before, even though we weren't even on the show. He just yells at just random strangers around him in the Starbucks. That's the kind of guy he is. Giving some of that back to the market gods today. S&P off about 0.75%. NASDAQ off about 1.5%. Dow off about 0.25%. VIX cash flirting with an 18 handle. That puts it up about 2 points from where it was this time on the Monday show. Got as high as nearly a 20 in the cash earlier in the session, right around 1970 or so, I think is where it topped out. So quite the spike in the morning. And a lot of this driven by a lot of things. Of course, there's the omnipresent government shutdown. Apparently, we're doing that dance again. Of course, concerns about geopolitics like Iran and everything flaring up. And then on top of that, we had quite the mixed bag in the earnings session last night. This is a hot week for earnings. If you were listening to the Hot Options Report yesterday, live listeners, or after the fact on the network, we had a wild show yesterday. A lot of big names were popping off during the show. And we saw the same trade go up in both Microsoft and in Meta, two M tech names, both people loading up on the pars. In the case of Meta, it was the 700s. In the case of Microsoft, it was the 500s. All of that expiring this week. So a ton of people rolling the bones on earnings. And those two identical trades worked out in diametrically opposite ways in those two names. The Meta, it was a deal. They paid nearly, I think, $11 for those calls on average, and they were still a huge home run in the after hours. Fast forward a little bit to Meta, or I should say to Microsoft, and it was the exact same trade, and they just got run over. The stock never even sniffed 500, and now, of course, it is down aggressively. One of the many things that is sucking the markets down today on top of the results from Tesla and everything else out there. Just absolutely wild. And if you want to see just the same trade play out in two diametrically opposite ways, check out Thor from yesterday, listeners. It was a wild ride. And all of that feeding into this sea of red we're seeing out there today. Our old pal VIX looking frothy again as well at about a 107 as we kicked off the show. Up 7 points from the Monday show. So once again, we are back to red on the screen. We will start with the Flowmaster. Sir, Mr. Flowmaster, what caught your eye in a very wild start to the session, sir?
I'll tell you, it's definitely been an interesting day, right? We actually opened up about 15 handles or so in the S&P futures, which, as most traders know, that's kind of what most people pay attention to, at least in terms of kind of the broad sense of things. And then we had about 100 handles of motion. We were down about 80. We've kind of bounced back a little bit. We're down about 40-ish or so in the futures, but that is really, it really is pretty interesting. It's a volatile day, and that, as you said, that's why VIX and VVIX is up now. VIX is actually kind of off of, for a bit it was up about 3 points. Now we're actually just looking it up about 1.5 points. But it's to have a handful of the Mag 10 reporting and to just see this, exactly like you said, this crazy divergence between Meta and Microsoft. It's interesting, and I was looking at it in terms of we have the SIBO Mag 10 index, which has basically the Mag 10 stocks in it, and to have basically half of them putting out earnings this week makes for all sorts of kind of different ways to play it. I had a colleague of mine that wanted to get long some Meta. I don't know if he did or not, but that stock's up 10% right now. Microsoft's down about 10%, 11%, and you look at those implied moves, and these moves are bigger than what was priced in. So that always makes it kind of exciting as well. So and the other thing that really stood out to me is if you look at the broad indexes, Russell is still really running the market. I mean, the Russell 2000 is up more than 6% year to date, while the S&P is only up 1%. Nasdaq's up about a 1.5%. So it's a bit of a different year. And I actually was talking to Mandy Zhu, who runs the market intelligence team here, and about this, and she said, that Russell versus the S&P or Nasdaq trade, right, where Russell stocks tend to be they're not as large cap, they're a little bit more capital intensive, so they're kind of more the industrial names. There's no tech names in the Russell exactly. She said that trade hasn't worked ever. So anytime the Russell starts out with a good run compared to the other Nasdaq or S&P, people basically think, oh, maybe this is the year that value stocks are really going to rebound and outperform the growth stocks, which is really what drives Nasdaq and S&P as well. And then it usually backfires. So, but I really am watching it and trying to figure out if this year really might be different. One thing is Russell stocks tend to do a little better because of lowering interest rates because they're capital intensive. But it's busy. We're on track for about 84 million contracts today. Like I said, 100 handles of motion in the S&P gets you lots of volume. So fun times here in the world of options.
I like that. This small cap trade that you've been talking about for a while. A lot of people have been talking about for a while. It has never worked, according to Mandy. Stick a fork in it. Fade the small caps now while you can, listeners. All sorts of fun playing out there in the markets today. Mr. Uncle Mike, a lot of living being done before we even got on the show today. Had some green on the screen early. You must have been excited, and then a color you're not that familiar with. What's been catching your eye out there, sir?
Oh, definitely the red on the screen today, to say the least. I mean, the big thing that I'm seeing right now, besides silver and gold going all over the map, we have good old Mr. Softy, Microsoft, down 11% on the day. When Microsoft goes down that much, it's typically not a good thing for the marketplace. Now, of course, like as Henry had said, we do also have the gains in Meta. So very interesting, to say the least, as to what's happening there. In terms of just the sectors overall, XLK, the tech sector ETF, is down almost 2.5% on the day. But other sectors, it's not near that much movement, to say. We have XLE, the energy, it's up 1.5%. Financials are up 0.5%. Industrials up 0.7%. So what's obviously driving this market down right now is technology, and it tends to do that sometimes. It will take you to the dance, but sometimes it doesn't take you home, or when it does take you home, it takes you to a bad spot. The daily move in silver is just fun to watch right now, and it's not like this is not the silver that I had talked about on the show for years and years and years, where it would do nothing and then all of a sudden just give us a pop. We literally open right around the 110 level for SLV, go down to 96. Now we're back to 105 on the day today. If this isn't a next generation meme stock type of thing, I really don't know what is, because it's sure acting like it. So we do have that. Interest rates were paused yesterday, so not sure if that's going to continue for the rest of the year. Once we get a new Fed chairman in, we do have kind of you could call him a lame duck Fed chairman at this point in time. But I think that interest rates are going to be a big deal in 2026, just not until we get a new Fed chairman, because I think the new Fed chairman is going to be pushed so to speak, by his boss, the president, to lower rates. So, a lot going on right now. And it's going to be interesting to see how this market fares with earnings coming up.
Yeah, if you want to hear Uncle Mike wax poetic about all things shiny, don't worry. He'll be joining me after this show to talk all things silver on TWIFO. By the way, if you want a deep dive into silver, we had a fascinating conversation about that yesterday on the Futures Rundown. Yet another reason why you should be checking out the full network. It's just, I mean, I can't remember ever talking about silver this much, probably in the collective 19-year history of the network as we have over the past couple of months. Couple of nuggets there on the silver side. Silver outperformed the S&P by 8x last year. Just put that in your pipe and smoke it. Oh, by the way, it's up already over 60% this year as well. So just absolutely wild stuff. Everyone who kind of laughed about the idea of squeezing silver, maybe taking a different look at the silver market right now. Let's take a look at the rest of the market, see what's lighting things up out there today, shall we, listeners? As we mentioned, as a flow master, Uncle Mike mentioned, bit of a whippy, sawy day out there in the markets, listeners. We've been kind of off to the races all over the place, over 100 handle pretty much range in the S&P already. Just absolutely wild stuff. And looking, still red up, but not quite as red as we were. And all this whipsaw action usually translates to some flow, and that's what we're seeing out there today. Exactly 700,000 contracts on the tape already in the VIX. That's usually a day's worth of paper these days, and it's already on the tape out there, listeners. So a wild stuff. The ADV is 785. We're probably going to hit that in a few minutes, let alone by the end of the day. So wild stuff out there. Speaking of wild stuff, what is the hot option on a wild day out there in VIX? Go ahead. Think for a second. Pick a strike. Pick a month. Pick a strike in VIX. What do you think is lighting up the tape? I'm going to guess none of you had the April 80s. That's what's lighting it up out there today. 50,000 of the April 80s have traded for 36 cents. I was doing a little digging while the Flow Master, Uncle Mike, were talking. Usually this kind of stuff is part of a 1x2, 1x4. I don't see the other leg on this unless the leg is so small that it is a ratio of 1x10 or something like that. It makes it hard to find. Looks like straight up April 80s, 50,000 times, listeners. Now, worth noting, there is OI on this strike, so they could be taking advantage of a little bit of a pop and vol today to get the heck out of Dodge. But either way, 36 cents. One of those weird strikes that certainly leaps off the page to you when you're looking at the flow out there on the day. So we thought, you know what? Perfect candidate for our audience to figure out what the hell to do with these things. You want to buy them or sell them? Pretty straightforward. And right now, our audience, as you always are these days, exactly split, pretty much 50-50 each. I guess that's what makes the market. So get out there and enjoy your April 80s for 36 cents. Number two, really quickly on a wild day. Let's do a top five. Why not? 41,000 of the Feb 20s. So a far more, dare I say it, reasonable strike. If you're wondering, those traded for about $1.80. Number three, 32,000 of the March 22. So a little bit farther up the chain and a little bit farther out in time. Those going up for about 2.25. Number four, almost 31,000 of the March 45s. A little bit north of 60 cents on average for those. And number five, 24,000 of the Feb 22s. Average price for these bad boys, $1.42. So it is possible we have a March Feb roll going on, maybe a little bit there as well. Either way, a lot of action, a lot of the stuff you'd expect, and some of it you probably wouldn't unless you really had a bingo card for the April 80s today. In which case, you should probably play the lotto. Behind it, we have SPY. And is SPY hot today? Do you really need to ask that question, listeners? Whipsaw days are usually tailor-made for some volume in the indexes, and that's what we're seeing. SPY already at 8 million contracts exactly. Just wild stuff. That's more than we've seen in entire sessions lately. 8 million today. The ADV is 9.2, so I think it's a fair bet, unless the market completely stalls out in the second half. It's a fair bet we're going to blow past that ADV today. The S, 3.65 million contracts already. The ADV, 4.1. out there. You know what? Just for fun. We haven't done this in a while. Let's see what's lighting up the tape out here in the SPX. We're at right around 69.30 coming into this part of the show here, and looking at the 6,900s, the par puts have traded 110,000 times. That is your hot option out there today. Obviously, that trade looks good in both directions, depending on when you put it on. You bought those earlier in the morning, you were looking pretty good. Hopefully you bailed on them. If you sold them, you were sweating. Now you're looking pretty good. It's just a wild strike, hence 110,000 of them going. Average price nearly $9, so obviously not giving these bad boys away. If you paid anywhere close to $9 for these, you might be wearing it a little bit right now. But then again, the day is young. It could come right back to you by the end of the day. Out to the small caps we go, the place where the Flowmaster says it has never worked in the history of time. If you were looking to ride the small cap train to fame and fortune and get the heck out of the large caps, it has never worked, says the Flowmaster. What's going on today? Small caps off about 1/3%, a little more than that, putting up 1.75 million contracts. So volume-wise, it is sure as heck working today. The ADV is only 1.6, so they've already blown past their ADV. And small caps are always fun because there's some zero-day stuff, but there's also all sorts of other fun, usually 1 month out downside puts. And that is the case again today. The hot option in small caps, 140,000 of the 250 puts in February. Average price for these about $2. And coming into this small caps IWM, we're at 262, so slightly out of the money. Feb puts, again, about $2. Are you a buyer of those bad boys, or would you be selling? By the way, the 251 puts also going up about 102,000 times. Average price for those, $1.90, so I'll leave it up to you. Then we got 80,000 of the 248 puts, so a weird little put strip dominating the tape there in IWM today. 80,000 of those bad boys for $1.65. So you can pick your put poison. Say that 5 times fast out there in small caps today. Are the Qs active? Yeah, you know they are. The Qs lighting up the tape out there. Already 5 million contracts on the tape. If you're saying that sounds like the ADV, you're right. That pretty much is the ADV. 5.2 million contracts. So they could fall asleep for the rest of the session and still make their ADV out there. So just a wild day. You know, Qs are all 0 day all the time, and the hot option out there today, 173,000 of the 625s. Average price for these, $1.51. So hanging out right around 625 and change right now. So these are straight at the money calls. You like rolling the bones on those, listeners? Would you be a seller or a buyer? I'm curious. As we keep rolling out to the single names, I was also curious if today would be a wild day on the single name equity option front. And the answer is yes, we are north of our threshold for respectability. It's been a while since I could say that here on the show. We looked for 350 as, yeah, that's a pretty active day. And we're at 405 right now, listeners. This is the hottest we've been this portion of the show for a while. Earnings season coming to play out there today. Number 10, our old pal Netflix. This back might help if I pull up some stock tickers to go along with this. I was so into the indexes, listeners. I got lulled into all that index action. I neglected to pull up some of our single stock friends. All right, so let's do that now. All right, number 10, listeners. We've got our old pal, Mr. Netflix. Used to call him the Widowmaker. I don't know what you call him now, but either way, he's number 10. 405,000 contracts on the tape for them. Netflix selling off nearly $2, hanging out right around 82.70 right now. Coming in at the number 10 spot. Number 9, my old stomping grounds. It's Intel. 441 on the tape. Trading a little bit shy of $48, 47.90, off about 90 cents or about 2% today. I saw some folks in the chat asking if I was back in my old stomping grounds. I am not right now. I'm not trading Intel, but one I do keep an eye on because it has been just, I think the technical term is completely crazy cakes over the last couple of months. So it's definitely an interesting one to watch. And maybe if you find an interesting level, might be a fun one for you to nibble on as we keep climbing to number 8. Another one that's had kind of a a wild year, wild start to the year, wild last week or so out there. Net, it is up about 11% for the year, so it's still having a good year, even though it started the year really rough. The first couple of weeks, it was off, about 20 handles, so about 10% down. Now it's up 10%, so it's been an interesting year. Giving some of that back today, off nearly $5 or nearly 2%, trading right around 248. For number 8, good old AMD. Number 7, keeping it in A tech names. It's our old pal Apple. Apple 472 on the tape right now for number 7. Trading 257.18, so up $0.75. Apple's been a very weird one. You know, you couldn't really get it to turn red to save your life last year. And then this year, it's been mostly red. In fact, they sold off about 5% so far year to date. Even though they have rebounded from their lows of about a week ago, that's when they got down to about 246. They're 257 right now. So they have regained some of their lost luster, but they entered the year 271. Still a pretty decent clip from that. Number 6, our old pal, the Monster. The Monster, 679 on the tape today. The Monster selling off again, 142 exactly, off $16.50 or 10.33%. So, man, strategy just getting its legs chopped out from under it. Number 6, the Monster. Number 5, we need to do another poll on this one. This is Uncle Mike's favorite holding. This is Palantir. They're coming for this one today as well. 150.63 is where it's hanging out right now, off 6 3/4 or about 4.25%. Good for number 5 today. 776 on the tape. Number 4 is where we start getting into the earnings action. It's Meta. You know the drill. People were buying all the pars they can get their hands on yesterday for around $11. Seemed kind of rich going into the announcement. $11, 2 days to go. You're really rolling them bones, and that was a pricey scratch-off ticket you were buying there. Lo and behold, it's a banger winner stock. 734.5. Got as high today as 744, $10 more. So if you paid $11 for those pars, you're looking pretty good right now. You're still $23 winners. And of course, at the apex, you were up more than that. So I think that's a pretty good return on your fairly lofty investment. Number 4, Meta, 1.07 million contracts. And then we have the other side of that coin, Microsoft. Again, check out Thor from last night. We break it all down kind of in real time. It was pretty shocking to see the disparity between the two. Number 3, Softy, 1.28 million contracts on the tape right now. They are coming for it. So Softy, they apparently say, yeah, that's too much AI spending. We don't like it. Whereas Meta, they're spending a ton as well, but they're also maybe making some on the ad side. So that helps. Either way, tale of two AI tapes out there last night. 423.64 is where Microsoft's hanging out, off $58 or 12%. My goodness. Here's a headline here. Balmer just lost $14 billion worth of market cap. I love those little headlines. So there you go, listeners. Steve Ballmer having a pretty bad day out there. Number 2. What is number 2 today? It's NVIDIA, at least right now. That's kind of interesting. We'll see if that maintains all the way through Thor after the bell. NVIDIA, 190, a little bit shy of that right now, off about $1.60, or not even a full percent. So kind of a muted day for them. They got as low as 186 earlier in the session, so they did have a bit of a sell-off earlier in the day before climbing back to where they are right now. Either way, number 2, 1.6 million. That means you know what number 1 is. It's Tesla. We were just talking about 4 half calls. They were back in vogue earlier in the week. Right now, I bet you folks are wishing they sold the hell out of those, because the stock 420.25 right now, off 10.25 or 2.33%. Good for 1.9 million contracts and the number 1 spot. Earnings are down. They're going to spend a ton of money on robotaxis and robots. They're getting rid of the Model S and X. So really trying to pivot away from that EV company to a robot and AI company, and trying to get those multiples that go with it, apparently, but not working today. Number 1, Tesla, 1.9 million contracts out there. So absolutely wild stuff on the earnings front. And you know what? We ain't done yet. More names popping off the rest of this week. Caterpillar this morning, surprising. You know, in the annals of surprise AI names, you wouldn't really think of putting Caterpillar in that list, and yet they were popping hard before the bell this morning because they're making a ton of money selling power systems to AI data centers. So they can't really sell their tractors anymore, but they don't care because they're selling power systems to AI data centers. So Caterpillar, a surprise AI play, and quite the hit, apparently, with all the kids out there. Everybody loving Caterpillar out there. Caterpillar up $21.61 or 3.3% again on the backs of some AI love. So there you go. You see AI in surprising categories out there. We got Apple after the bell. A lot of eyes fixed on that. It's been obviously a rough start to the year, but a great year last year for Apple. Can they continue that? They've been, in the past, masters of the bait and switch around earnings time. We'll see if they can pull it off again. Tomorrow, SoFi and Amex, and then Chevron and Exxon getting in on the energy side. All sorts of fun. We're still waiting for the updated earnings move results, and earnings season reports. As soon as those hit the tape, you can find them on the website, theoptionsinsider.com. But now it's time to find out what the Flowmaster has in store for us today. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, it is time to get weird. It is time to get wild. It is time to see what the Flowmaster has in store for us today. And we're going out to the land of the Wolf. Yes, our old pal, the Wolf, but perhaps not the Wolf you're thinking of. Not my favorite ticker of all time, Wolf Speed. No, the other Wolf. A cool ticker as well, but not quite as cool as Wolf Speed. It's TeraWulf. Ticker WULF. The other Wolf. The, dare I say it, Germanic Wolf out there. Saxon Wolf, either way. Trading 14 and a quarter today, off 83 cents or 5.5%. So apparently they didn't get the memo that these hot meme type stocks are not allowed to sell off. On the year, it's been a heck of a year for the Wolf. It was 4 3/4 a year ago. So they're up $9.50 or 201%. So a nice little clip. This name really came on our radar on the network and a lot of people's radar back in the middle of last year, right around the August timeframe. At that point, they were pretty much literally unched on the year. From January to August, they were still trading 476, so they had moved a penny. It was kind of a wasted first half of the year. And then they shot up. They went from 476 on August 13th, they were 5 1/4, and then they shot up August 18th, 938. So they got all kinds of love, and they shot up again in mid-October, $15.50. And they topped out, looks like, at $17 in late October. And then they had some sell-offs down to $10 again in November, then back up in December to 15 3/4 on December 10th, and right back down. End of the year, 11.15. So a very topsy-turvy Q4 for this name. Fast forward to today, Mr. Flowmaster, sir. What did you spot out there in our second favorite Wolf?
Well, yeah, I remember we were playing around with Wolf, the other Wolf, earlier. I guess it would have probably been last fall. So it's a Bitcoin related name, and it's, Bitcoin has kind of sat out most of what the market's been doing lately. So, we hit all-time highs, I believe, this morning, right, in the S&P, and before we sold off pretty sharply. Bitcoin is not, and we've also been talking about gold and silver, which was at all-time highs. Today is a little bit of a kind of a risk-off everywhere, and IBIT, the Bitcoin ETF that is the largest one, is down almost 6%, with spot Bitcoin about the same. So what's a little bit interesting in this one is a very large sweep call buyer in the February 16 call. So like you said, the stock's around 1430-ish. This actually happened just after 12:18 New York time, when the stock was 1414. So the stock was a little lower. Somebody bought 36,000 of the Feb 16 calls to open a new position. They basically paid from they paid from about 75 up to 85 cents. Their average was 82.6 cents. So, and when we look at it in Trade Alert, we can kind of see that it was a 20-piece sweep, but the biggest part was on the box exchange. And in fact, they paid the first ones they bought, they paid 71, but to finish the order, they paid 83 cents. So that is some pretty solid kind of impact premium that the buyer was willing to pay. This is a $3 million trade. It does not look like it'll include earnings because those are not supposed to come out until kind of they're not formally scheduled yet. But last February they were like near the very end of the month. So I'm not sure what this buyer is looking for, but this is enough of kind of a chunky trade that I bought some stock kind of right around here. So I didn't notice the trade actually until I was working on the notes for the show. But similar to kind of Ardex, which we talked about last week when I was in Chicago, and I made some money on, and even CWEN, which was a much smaller trade. But in this name trades on average about 80,000 calls a day, and this is one trade that's that's 36,000 contracts, and in fact on the day it's traded 66,000 contracts. So there is some of those are more recent, but my feeling is it's one buyer, and I'll tell you the total call open interest in the name is 1.46 million. There's a couple of very large flex revcons in there. This will create the largest regular listed option position. It looks like there's about 50,000 of the March 20 calls that are open as well. So this is just a very big dollar directional trade. I don't really know what they're looking for, but I don't mind taking a small stock position to just kind of ride their view.
Yeah, I'm looking here. It seems like there was some takeover speculation swirling around this name. These are Feb options, but they're not going to get them the earnings. The earnings are not until February 26th, so that is outside the lifespan of these options. So it looks like maybe they're hoping for a little bit more M&A activity between now and the end of Feb expiration, or just more buyers and sellers between now and then. As we keep rolling to a newcomer, I would definitely recommend, or I should say, I would definitely remember this this ticker out there. What are we talking about? We're talking about YPF. Everyone's favorite, YPF. This is actually a Brazilian, or not Brazilian, this is Argentinian oil and gas name. A ticker, appropriately enough, YPF. Trading $38.92, up about a third of a buck, or not even 1% today. On the year, if you've been following the oil markets, it's been kind of a tumultuous year, and that's kind of the case for them. A year ago, they were exactly $40. Kind of wild. So they're off $1.08, or not even 3% on the year. That said, they've had some fits and starts. They sold off on April 8th to $27. Then they rallied again by May. They're back up to almost $40 again, about $37. Then they sold off again in October to their low for the year of $22.82. So at that point, they had been cut pretty much in half on the year. And then they've managed to claw their way back by not even about a little over a month later, November 18th. They were back to almost $40 again, $38.66. So if you scooped this in October, you had a nice run. You almost doubled your money between early October and mid-November. Then they sold off again January 7th, down to about $32 again. And since then, they've been climbing once again, trying to get back to that 40 level that they seem to top out at a lot out here. That said, Mr. Flowmaster, you always bring the fun tickers. What's catching your eye in YPF?
Yeah, so YPF, as you said, it's a Argentina-based company. So the YPF that you can trade in the States is an American Depository Receipt. But what caught my eye on this one was a trade at 12:35 when the stock was 39.05, and it was a 9,999 lot of the April 43 calls. And it literally caught my eye because of the fact that they used 99.99 as the size instead of 10,000, which the conspiracy theorist part of me said, oh, they're doing that to avoid somebody who's got a 10,000 minimum on their block scanner. It is an opening trade. I did trade on the trading floor of Miami's Sapphire. That's the one that's actually located in Miami. It's the latest floor to open up. So you have to be a little careful about kind of information leakage before the trade, but I believe it's a buyer. Basically, volatility is higher in there, skew is flatter in there because of the trade or following the trade, which makes me feel like this is an upside buyer. I don't know. As you said, it's an energy name. It's been, this year. I mean, God, I guess we'll be finishing up the month this week, right? But it's been an exciting one between the stories, the energy story, the metals story, the Mag 10 names. Just there's so much happening. But in this case, somebody seems to like the stock, even though it really is at kind of the high end of things. Again, I also bought a small piece of this, just because I'll tell you lately, the unusual option flow seems to be kind of working for me. So I took a little stock position in this one. The stock is basically a couple 5 or 6 cents below where it was when that trade printed. And I don't think it has earnings anytime soon. Not until it looks like it's scheduled for the end of February. So this is an April trade. It's got a long time to work. But I don't know. Maybe it's got some loose connection to what's going on in Venezuela as well. So interesting one. Again, it's much bigger than we usually see. Average daily call volume in there is only trades 3,300 calls a day. So somebody bought a single position, which is 3 times the average call volume. That's worth paying attention to.
All right, let's get out of here. Paying off a Flowmaster trade we've been tracking. Looking at this GTX one, but this GTX one is actually still open. They keep rolling it. They're open in Feb now, so maybe we'll come back to that in a little bit and see how that one's working. Let's instead go out to everyone's favorite Mod G. Ticker symbol MODG. This is the Topgolf Callaway combo. We talked about this before, how Callaway thought buying Topgolf was going to really turn their business around, get all the kids in who love Topgolf, but maybe weren't buying clubs. And then, hey, they're going to start buying clubs because they love golf so much, and didn't really realize people don't go bowling and then buy a bowling ball. It didn't really work out. So that marriage has kind of come to an end for the most part out there. But we talked about it back on the November 20th show with the Flowmaster, and he brought up when the stock, good old Mod G, was $9.76. Somebody came in on November 20th and said, you know what? I'm feeling a little bit of upside in this Topgolf Callaway. I think golf going into the holiday season is where I want to put my money. They came in and said, these 12 halves, how are they? They got nickel at 30 cents, so kind of a crappy market. They ended up saying, I'll pay about 28 cents for 5,000 of these D's 12 halves. They came in and did a few more after that for other prices out there, but that was the big print of the day, the 5,000 lot. And looks like they were close to the mark, but not quite close enough. So again, the stock was 9 3/4 when they bought these. So they needed quite the run for these calls to pay off, and they almost got it. The stock ended up closing at $12.20 on December expiration. Unfortunately, all these bad boys were still open. So looks like they maybe got a little bit too big for their britches. $12.50 in a little over a month. That's a pretty lofty move. They got most of it, but not enough, obviously. And so they ended up dropping $138,000 on that 5,000 lot, Mr. Flowmaster. So perhaps a classic example of reaching a bit too far with your options trade, sir.
Well, and that they took that went into the whole corporate action, right? So, I've held options or traded options into deals. I still have some DuPont that spun off Q, a symbol called Q, and it just gets really messy. Now, if they were long at into expiration and the stock hadn't changed into anything yet, fine. But I don't know. It can be, options that become adjusted contracts or that you just hold into a deal tender or anything like that. They get really, really messy. I'm not a fan. And unfortunately, even when it's a relatively simple tender or a relatively simple corporate action, you tend to lose the liquidity. So, an option that's worth $1 that, you could have gotten into for, 1 to 105 or something, all of a sudden is 50 cents at $1.50, and nobody really is interested in trading it. So, you have to be really careful on something like that. I don't know if they got into this knowing that I think that deal had been sitting for a while. So I think the timeline was clear when they got into the trade. But not all trades work out, but maybe it fit their goals, and they were happy to have kind of that asymmetric payoff potential, even if it didn't work out.
Yeah, if you're wondering, listeners, Maji is now Cali for Callaway, back to Callaway. They've dispensed of the Top Golf side, trading $14.50 right now. So perhaps if they had gone a little bit farther out and gone the old Cali way, perhaps they would have been happier campers on this trade. But either way, let's keep rolling. It's Thursday, time for you folks to get on a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
I'm looking here in our chat, a lot of talk about Microsoft, which is understandable. Also some talk about oil and silver. I think we'll come back to that in a little bit on TWIFO when Uncle Mike joins us after this show, but a lot of discussion on good old Softy, Mr. Balmer's losses, Bill Gates' wife's losses, all sorts of fun out there. Speaking of fun, listeners, let's go on out, see what you folks, right now 2/3 of you want to sell those April 80s in VIX, so you've decided 36 cents for all that upside is a little bit too rich for your blood, so sold to you out there. We'll keep an eye on these. Our actual question of the week right now, though, is very much germane to what's going on in the market. Tech earnings, all the rage this week. Tesla, Meta, Apple, Microsoft, all these big names popping off this week. We asked you quite simply, how are you approaching your options trading this week? I gave you 4 simple choices. Are you selling the old premium, sell the preem and live the dream? Are you buying some juice out there to roll the bones? If you bought those Meta pars for $11 yesterday, you're sitting pretty today. Are you going the 0-day index route? Remember, we've got the 0 DTE single name equity options, but it is earnings season, so that's the one carve out for those names. So a lot of those are listing next week. And then, of course, you're just deciding, you know what, this is a little bit too wild for you right now. You're sitting on the sidelines. Mr. Uncle Mike, what is your call out there? And B, which way do you think our audience is going?
I think our audience they are actually option buyers. And in terms of what we are doing right now, it wasn't necessarily earnings that drove us to this, but going into this month with our covered calls, we were getting into a lot of premium last week. On Tuesday, we had a little bit higher of a VIX, and so sold a little bit tighter at the money premium than I normally do. I could not resist the juice. And so I guess if you want to view it from that angle, I'd say we are premium sellers going into earnings.
I always knew you were a degenerate premium seller. In your heart of hearts, sir. I can spot one a mile away. What do you think our audience is up to?
I think they're buyers of it. I think they want to buy the juice and let it ride.
Buy the juice and ride the caboose, apparently. Mr. Flowmaster, same question for you. You tend to lean a little dark side, I know, but lately you've been nibbling on some of these trades, so maybe you're more of a long premium guy, or maybe you're liking to load up on stock these days as well. And then B, which way do you think our audience is going?
Well, I do kind of agree. It just feels like being on the long side has been a little bit more comfortable lately. We were kind of hanging near all-time highs. VIX was around 15. It felt a little complacent. I'll tell you, on the silver situation, I did put a post on LinkedIn highlighting how extreme upside skew was in there. Right now, the stock, that silver was up so much that it kind of makes sense. But the kind of the subtext, and in fact, one of the comments from somebody from Fred Ruffy, who actually I used to work with. He basically said, we expect to see some hedging or some taking gains. And what I was talking about was that I actually mentioned the two strikes. You could basically buy a 10% out of the money put, sell 10% out of the money call, and take in a chunky credit. And so, then you look at what the move we had today, and that would have been a great trade. I should have followed my own advice a little bit, but I would say that our listeners probably are premium buyers as well, just because it's become a little. I don't know. I think they're pretty smart, and things have gotten a little fraught out there.
Mr. Ruffy, haven't heard that name in a long time. Hope he's doing well out there. See how our audience is doing right now, and almost half of you, about 44%, looking to sell the preem and live the dream. Then we have a tie for the other three, all close to 19% each, between buying premium and then trading 0-day index options and then sitting on the sidelines. So the rest of you can't really make up your mind. Oh, by the way, we just ticked. We're up to 75% now on people who want to sell those April 80s. So there you go, listeners. Get over there at options and make your voice heard.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until our next episode. Coming into the end of the show here, we have the S&P maybe mitigating the sell-off a little bit, off about 0.2%, Dow off 0.25%, NASDAQ off 1.33%, and VIX Cash coming back to earth a little bit, hanging out at 17.5 right now. So is this the trajectory? We're going to drift back up and maybe mitigate the sell-off, or are we just going to pause now before we plummet around again? By the way, if you're wondering, VIX up to about 770,000 contracts right now on the tape, just out of curiosity, and the S closing in on 4 million contracts already. So it seems like it's going to be a banger day out there in the market. Mr. Flowmaster, we'll start with you, sir. What are you keeping an eye on until your next show next week?
Well, the earnings, right? We have Apple have to close today. Apple just kind of hasn't done anything lately. It's some people are, I think, got a little bored with it, but the market's pricing in around 4%, which is twice as big as the average move. Let me just see what it was looking like before today, because what we see, as you know, is we see the market kind of reprices names once the peers report. So yesterday, it was about the same. So if you go, but it's funny, if you go back even a few days, you kind of have that 4% straddle has been pretty sticky. So some traders like to take a straddle into earnings and kind of try to see if they can get some kind of free gamma, because the case can be very muted. So I'm going to be watching the earnings from Apple. And we also have Amazon, I think, next week, Palantir, MicroStrategy, or just Strategy. So there's earnings coming up. And, really just kind of watching the macro picture. And we got through the Fed. It's kind of like a nah. But, when we get moves like what we're seeing today, where market starts out strong and then is down 1% and then kind of bounces back, I don't know. I get the feeling like it's going to stay pretty choppy.
A little bit of chop for the near future. Mr. Uncle Mike, sir, what are you keeping an eye on till your next appearance to battle for trivia dominance on Monday?
For sure. Of course, you got to watch earnings. That's the main thing right now. That's pretty much it right now of what there is to watch specifically, besides any potential tweets or any potential headline risk that we have from our president. But earnings and Donald Trump.
The dynamic duo, earnings and Mr. Trump. All things that could add a little bit of spice to the mix out there. That music means we're done with the spice, at least for this show. Don't worry, I'll be back in a little bit talking probably some silver, maybe some crude. Who knows is going to make it onto the show. Probably some equity options as well. With Uncle Mike on Twifo in a little bit. If you're hanging out in the pro, just hang out We'll be back in a little bit with that fun. And then, of course, back after the closing bell with our new friend, Mr. Thor Odinson, a.k.a. the Hot Options Report. Been a wild one lately. Probably going to be a banger after the bell today with Apple as well. So look forward to that. Should be a fun one. And Mr. Uncle Mike, if folks want to look forward to a little bit of Uncle Mike goodness, where should they go? What should they do?
Check out my YouTube channel. Just type in stcharleswealth.com. I'm sorry, just type in St. Charles Wealth Management and in the search box, and you'll see the content that I've been putting out lately. If you are interested in working with a financial advisor, check out or go to stcharleswealth.com, book an appointment with me. Always love talking to our listeners.
And Mr. Flowmatch, the same question for you. If folks want to kick the tires and light the fires on a whole bunch of cool SIBO goodness, where should they go? What should they do?
Just head over to SIBO.com. You can see our newer products there, the Mag 10 Index, XSP, which is Mini SPX, and SIBO.com/RMA is where we have our risk and market analytics, data, platforms, all that cool stuff, the trade alert terminal that you can request a trial on. So head over to SIBO.com and see what we have and check out our products. There's some great stuff happening.
All sorts of cool stuff. You can battle the Flowmaster for the top spot in the Mag 10 options. Maybe you sling a nano or two with him. All sorts of fun over there. Begin your journey. SIBO.com, CBOE.com, the place to go to learn more. Got to get on out of here. Back again in a little bit on all things TWIFO. Talking futures options. Should be a fun time. Back again with Thor. Then back again tomorrow. Talking vol with our good buddy Dr. VIX and special guests. I got a feeling it's going to be a wee bit of vol to talk about this week yet again. And then, of course, back again on Monday. Another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by SIBO. SIBO's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.sibo.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.